Thank you very much for those words. I guess the gauntlet has been thrown. There are 30 trailblazer organisations today, and Minister Gillespie wants to see more than 200 in 2 or 3 years' time. So certainly I think, expanding this so that more organisations are part of it. We heard from Ms Rickard earlier that the telco sector is one that is lagging, so perhaps that's somewhere that we might see some change at some point. So time is running away from us, so we're going to jump straight into our panel discussion now. I'm going to ask the panel members to come up one by one and sit in the farthest seat. This is going to be a discussion about the role that various sectors can play in achieving inclusive growth. I'm delighted to welcome speakers from some of Australia's most innovative and exciting organisations to discuss their insights, learnings and ideas. So please welcome to the stage, first of all, the Honourable Anna Bligh, CEO of the Australian Bankers Association. Anna Bligh was, of course, the Premier of Queensland for almost 5 years until March 2012, and was also the Deputy Premier and Treasurer of Queensland before that. In recognition of her eminent service to the Parliament of Queensland as an advocate for education, the role of women in public life and services to the not-for-profit sector, Anna received a companion in the General Division of the Order of Australia Award in 2017 Australia Day Honours List. So next, I'd like to welcome Pat McCafferty, the Chair of the Water Services Association of Australia. Pat has extensive experience across the water sector and held various general manager roles at Yarra Valley Water prior to his appointment as Managing Director. Pat is also a member of the Monash Infrastructure Advisory Council. Next, Keith Besgrove, Senior Policy Advisor, Energy Consumers Australia. Keith has over 15 years' experience as a division head in the Department of Communications, where he was responsible for policy advice to government on all aspects of the digital economy. He has implemented programs to adopt broadband in healthcare and education. He is also a member of the board of Internet Australia and of the Computer Society's Australian Computer Society's Professional Standards Board. Next, please welcome Professor Ross Buckley, Scientia Professor at UNSW. Ross was appointed a Scientia Professor and to the King and Wood Mallison's Chair in International Finance Law in 2013. He consults to banks, finance houses and government departments. His current focus is on fintech, finance technology, regtech, regulatory technology and blockchain in developed markets and the enabling regulation of digital financial services in developing nations. Phew, that's a mouthful, isn't it? And finally, Jason McDonald, Chief Policy Advisor for Prime Minister and Cabinet. Jason is Chief Policy Advisor for the Domestic Policy Group within the Department of the Prime Minister and Cabinet. He also serves as Australia's G20 Sous Sherpa. I have to ask you what that means in a moment. Jason's career has spanned a number of federal government departments with extensive experience in the Treasury portfolio. Jason has a keen interest in both domestic and international economics and is always interested in fresh approaches. And fresh approaches is exactly what we need. So let's kick off with our discussion. And there's a question, first of all, for all of you. And perhaps we could start at the end with Anna and move along. What is the unique role of your sector in promoting financial inclusion and therefore leading to inclusive growth?
Well, the central role and purpose of banks is to transfer money and credit from those who have it to those who need it. And every single time a bank makes a decision on that very issue, they're acting to either include people in opportunity or to exclude. And as we heard earlier, a decision to give someone a car loan is often much more than getting them a car. It's about getting them a job, making them mobile and allowing them to participate in the broader opportunities of Australian life. A decision on a student loan, similarly, a decision on a business line of credit for a small business might be the difference between that startup surviving and thriving or not ever getting off the ground. So those decisions are, at their heart, absolutely about inclusion and opportunity or denial and exclusion. Obviously, banks also have an incredibly tight regulatory framework around them about the circumstances in which they can make those decisions. While banks have extensive hardship programs, and the banks that have been, the 6 banks that have been trailblazers in the FIAP first phase have all got very, very strong hardship programs. I think the really important thing to remember is that actually every single decision that a bank makes in its core business is about inclusion or exclusion. When a bank makes the right decision, it can open up a world of opportunity for someone. If a bank sells someone the wrong product or lends them money they can't afford, it can put people into a spiral of debt and failure. So this is an industry that is right at the heart, I think, of financial inclusion in Australia. And I think it's a great credit to Australia's banks that all 4 majors and Suncorp and Bank Australia participated in the first phase. And I certainly think you'll see a lot of interest from other banks in picking up the program.
Okay, thank you. And Pat, would you be able to take that for the water industry, please?
Yeah, sure. Good morning, everyone. Can you hear me? Yep. Water, by its very nature, is one of the most essential services that people have access to in Australia, and you need, good water and sanitation services in order to be a thriving, productive. That's better. Thriving, productive community. And because the Australian water sector touches just about 99% of the population, we can have a massive impact, both in terms of our bills, but also in terms of what we can do to help the vulnerable. One of the things about the water sector, I guess, is that we were originally created around public health, but that's absolutely extended now into well-being and supporting productive societies. The more that we can do to keep pressure off water bills, which are about 2 to 3% of average disposable income, the more we can to alleviate the impacts that are happening across the community. And we're not that far off, an interest rate change that could have a significant impact. Research by the Victorian water sector, for instance, has found that about up to 50% of customers have struggled at some point in time to pay their utility bills. The other thing about the sector is it's highly collaborative, and it recognises it's really interconnected, and things like the impact of climate change, the environment, and the contribution that we can make is all well recognised, but we need partners as well. And that's one of the reasons why the water sector in Australia has collectively signed up to the Sustainable Development Goals. We see that we can absolutely make a difference and work together to ensure that no one's being left behind. That's not only just at a local level, but recognising the global perspective as well. And I think just one last thing, in terms of sort of the work that we do from a collaboration point of view. Recently, I think Adam mentioned the Thriving Communities Partnership, which has been sort of a catalyst out of the water sector, but now it's great that we have energy, telcos, banking, insurance and the welfare sector, and a very important partner in Good Shepherd Microfinance as well, to see what we can do by coming together to improve the access that people need to essential services in order for them to thrive. And the sort of things that we're talking about, for instance, is a one-stop, one-story. So why should someone who's struggling to pay a bill, if they present themselves to the water utility, they can't pay their bill, clearly they're going to have other issues with all of their other essential services as well. So why would they have to tell their story 10 times? So what can we do to actually have a one-stop, one-story system, for instance, which would not only be highly productive for all the players that are involved and efficient, far more efficient, but would actually make life so much more easier for the people who have to go through those processes, which aren't easy, but as Anna said, banking, energy, everyone has hardship practices and a lot of support available. But how do we make it a lot more easier for people to access those?
That's a really good point. And Keith, I'm sure you have some thoughts to share about the
Yes,
energy
thank you very
sector.
much. For those of you who haven't heard of us, Energy Consumers Australia was set up about 3 years ago by the COAG Energy Council, specifically to try and provide household and small business consumers with a stronger voice in the energy sector. So we're a comparatively new organisation. We're looking at these issues from a consumer perspective rather than necessarily from the industry association perspective. We certainly welcome being here. I'd like to acknowledge the fantastic work that Yarra Valley Water has been doing. That idea of trying to find a way in which to assess people once rather than 10 or 12 times over when they're in hardship, I think is a fantastic initiative. We've had some involvement with it, and I'd really like to applaud that. A couple of things that I wanted to mention this morning. It'll be no surprise to any of you in this room that we're facing something of an energy affordability crisis in Australia, and Rod Sims from the ACCC actually uses that terminology when he talks about energy in Australia. It's very important for the major retailers in Australia to be seen to be stepping up to the plate. They've all got hardship programs that they've had in place for some time, but they're coming under a lot of pressure from governments, from consumer organisations and from others to do more. Their involvement in the Financial Inclusion Action Plan program is a fantastic initiative, and we really welcome it and we applaud it, because when you confront issues of affordability, there are certainly many Australians who simply don't have the money, as Delia mentioned before. But there's also a lot of people who can really benefit from better disclosure, access to more information, and access to the skills to manage their money better. So we strongly applaud the involvement of the three energy majors in this program. You may not be aware that there's another 30 electricity retailers in this country, so we think there's a lot more work to be done. Some of those are quite small, but some of them are growing rapidly, so a challenge for Good Shepherd and for all of us is to find ways to spread that religion out and to try and find ways, and I encourage the three majors to talk to their Tier 2 and Tier 3 competitors and try and encourage them to come on board as well.
Okay. Moving to you, Ross, please.
Yeah, good morning. My research is in fintech, regtech and blockchain. My 3 teenage children think that's hilarious because there's still a lot of things that I can't do on my mobile phone that they can do. But somehow that's what I've become known for. And basically, I won't go into the details of what that is, but it's a whole lot of technology. And what it does really is mean we're at a pivotal place in the delivery of financial services. The best example you can see today is China. China's outstripped the West in this stuff. When Jack Ma makes a small credit loan in China, he typically does so on an average of 20,000 data points. He's got over 20,000 data points on every Chinese person, pretty much. And in Australia, the banks and financial services providers and others have a tremendous amount of data on each of us, but they're typically not using it very much at the moment. That is going to change. It's changed in China, it's changing in the US, it'll change here. So I could go into an awful lot of what that means. For the banks, it probably means the application of technology means they can save about $20 billion US in their back office expenses globally, which is very nice for big global banks. But what does it mean for poor people? Potentially what it means is a lower cost delivery of financial services and much faster and more accessible delivery. In other words, not needing to come into a branch anymore. And really where the rubber's going to hit the road on this is what we call small amount credit contracts and medium amount credit contracts in Australia. So the small ones are loans up to 2,000. It might surprise you, I hope it shocks you, that our regulations in Australia allow payday lenders to charge 68% per annum for loans up to $2,000. 20% up front, 4% a month. That's only the beginning of the payday lenders' business model. In reality, most of them are, earning about 100% because they're really default businesses. Unlike the people in this room, they're not interested in getting people out of debt. They're interested in getting them in debt, keeping them in debt, rolling the contracts over. So, as a nation, we agree to poor people being charged 100% per annum, in effect, on their loans. Technology offers a solution to that. The reason the lenders can say they should charge that is for very small amounts. The administration is obviously very expensive. Once data starts to get used, once we start to emulate China's example, we should be able to do that a whole lot more cheaply Once we can start to prove we can do it more cheaply, we should be able to put pressure on our governments to start to reduce those rules, those levels that are allowable. Thank you.
Thank you. And Jason, and please do also tell us about what it means to be G20 sous Sherpa.
Oh, I will, yeah. So I'm actually here in my capacity as the G20 sous Sherpa, and unlike all the fantastic people we've heard from this morning, I feel like a bit of a fraud because I'm at this macro level and don't deal with the real.
Not.
Well, it's kind of ironic to be a fraud at a financial inclusion seminar. So the G20 actually has financial inclusion as one of its commitments. The leaders have delivered that, I think, since back in Seoul's year in 2010, and it really geared up for Australia in 2014 when we held our year. Most recently, though, the G20 leaders meeting last year in Hamburg committed to the Sustainable Development Goals, and financial inclusion is a key part of actually achieving that as well. So there are 17 Sustainable Development Goals, and these are the goals which all G20 countries have committed to achieving by 2030 to the kind of sustainable economy and society that we actually want. They cover things like ending poverty, clean water. The goal 8 is sustainable economic growth as well. So it's to broaden it out. I think in the documentation you've got there, it says that financial inclusion contributes to achieving 12 of those goals, and there's other reports I've seen where it's 7. I tend to think of it as being all of them in one sense, because what financial inclusion, or what finance really does, is it shifts consumption through time. And financial inclusion means that that's distributed fairly. And unless you can, and if you think about the Sustainable Development Goals, they're about the future, about consuming in the future, about living well in the future, and finance is essential in some sense to every one of those goals and every one of the domains, whether it's climate change or ending poverty. So we're if you actually look at the indicators that the Sustainable Development Goals that the countries have actually committed to achieving those goals, there's something like 169 targets and 232 indicators. And these indicators will have things like access to finance, etc., and the ability to, the avoidance of large pressures around healthcare or unexpected expenses around healthcare. And these are the kind of things at the micro level that everyone in this room's sort of responsible for and trying to achieve. Now, why am I called the sous Sherpa? So the leaders' meeting it happens at a summit, and this year it's going to be in Argentina and Buenos Aires later in the year. My boss is the Sherpa who helps the leader get to the summit. It's Dr. David Gruen, and I'm the sous Sherpa, a bit like a sous chef who works in the kitchen and does everything that the Sherpa doesn't want to do, and that involves a lot of really interminably long, bad international meetings and some really pleasant things like this morning.
Fabulous. Well, I guess a follow-up question about how programs like FIAP will help Australia achieve our G20 ambitions and the Sustainable Development Goals. You've touched on that, but saying that financial inclusion underpins a lot of it. But how far will it take us, and how far will we need to be kind of doing other things?
So there's a thing called the Voluntary National Review, which will be coming out in the next couple of months. The government will be releasing it in New York in July. And this is the national report. It's a report on behalf of the whole country. It's not just what the government's doing to achieve the Sustainable Development Goals. It's what the not-for-profit sector, the business sector is going to be doing. Inside that, there'll be, and it'll report on the targets. It'll say, under each one of the 17 goals, here is how Australia is actually going and achieving them by 2030 in terms of poverty, etc. And we'll have in there indicators, including on financial inclusivity, how we're going on that. But also little case studies to, not little, persuasive, we hope, case studies to say these are the kinds of things Australia is doing to help achieve those goals. And these are for other countries to look at, but also for the domestic community to look at. And it's not only going to be a positive story because it's a report card, and we're not unlikely to get A+ and everything. But it is a report card on the way to 2030, which we hope the media and the community will hold the government to account and the not-for-profit sector and business to account about what are they doing to make sure that these goals that we've committed to by 2030, that we reach them. And the kind of things that are being talked about here, hopefully some of those case studies will be reported in the VNR.
Okay, great. Well, the next question is for Anna, Pat and Keith about the value that the FIAP program brings to your sector. But I also want to throw into that one of the problems for financial inclusion and understanding is the complexity of what's on offer. Like, for example, you take energy and you've said that there's a vast number of energy retailers. They all have different plans that can make it very hard to compare between, and that's a problem in banking as well. I mean, it has good sides that there's choice and you can tailor it, but it can be quite difficult to actually comparison shop. So that might be something that you address as you talk about how FIAP kind of benefits your sector.
Okay, well, I'm happy to respond first. One of the things that's clearly going on in the energy sector is that there's a very strong sense of crisis pervading that sector. Energy Consumers Australia, every 6 months we do a survey of about 2,000 consumers to see what their attitudes to the energy sector look like. It's very clear from that survey that people don't have a lot of confidence in the sector in terms of looking after their interests, and they're looking for changes in behaviour and changes in product offering. The energy retailers themselves are confronting real pressure. We've seen lots of instances in recent months or recent years of governments, both state and federal, looking at different forms of intervention in the marketplace. You have the initiatives of the Prime Minister, for example, calling the major retailers in to talk about what can be done. It's not in the industry's interest to have that level of government intervention, so clearly they're looking at ways to respond to that. Consumers are looking for much simpler product offerings. They're looking for much greater disclosure. They're looking for support in terms of hardship support. And you need to look at it in terms of that broader environment, if you like. Within that environment, the FIAP program offers a fantastic framework. And it enables, and if you talk to the energy companies themselves, they will talk about the value of FIAP being as much as anything else to assist the cultural change within their own organisations. I've heard Jenny Hodges from Energy Australia describe it in exactly those terms, that it's, in some respects, it's things they're already doing, as well as new things, as well as collaborations with other sectors, such as Yarra Valley Water. And it's all about trying to make the product offering more understandable and to put consumers into a stronger position to be able to manage their own future. That's what Energy Consumers Australia is looking for. We're looking for market-based solutions. We're not asking for major government interventions, although we think more support for FIAP going forward would be a really good idea for the government people in the room. But we think that it's powerful as a framework, and we think it's a great way to help to drive cultural change within the retailers themselves.
Well, let's go to Pat and then Anna, please.
Sure. Well, I guess when it comes to competition, the water sector isn't in a competitive marketplace, although we do compete in the great contest of ideas. But I would like to acknowledge City West Water and Modern Water for becoming trailblazer organisations. I think when it comes to competition in this space, though, there shouldn't be. Competition should be left at the door because, collectively coming together, we can make a much bigger difference by working together. If I think about what it means for the water sector and in broadening our thinking, I guess it's sort of the conversations that we have within our own organisations around, we have a big productivity push. We want to take pressure off households and businesses. And quite often to be able to make the links and real life examples for people within our business to see, to say this is why we're so aggressive on our productivity. Because of the impacts that we can have in the community and the fact that we can actually take pressure off bills, and it makes it a bit real. And another example, we're extending the metropolitan sewerage system, for instance, out to the outskirts of Melbourne, capturing areas that were previously sort of populated quite sparsely, and people are on septic tanks. Now we can't sustain that anymore because those systems can't contain the waste, and they're having impacts on the environment. So we're rolling out the metropolitan sewage system, but quite often these areas are socially disadvantaged, don't have the money to be able to actually fund the connection. So you're sort of building the sewage system, but there's a lot of additional cost for the people to decommission their septic tank and connect. And we're actually talking to our guys out in the field to actually provide information about the assistance that might be available for those people, financially, for instance, where FIAP comes in to enable them to do that and to be part of that system. So that's just a classic, typical example of how we're actually able to now broaden the conversations throughout our organisation and through our partners and contractors as well.
Okay. In the banking sector, and I think probably across all sectors, the strength and power of the FIAP program is that it provides a structure for which individual companies in that sector can think about the best way for them to structure financial inclusion programs or products or strategies, and it gives a uniform structure across industry sectors to report that back. And I think that's actually a really powerful thing. You can actually have a look at and think, say just in the banking sector, the individual banks, ANZ's got a low interest credit card, what are the features of it, and should our bank be doing that? And then across sectors, the banking sector can look at what might be happening in telcos or other things to get ideas. So I don't think anyone has no one has a claim on the best ideas. And often these hardship programs and initiatives inside big corporations, too long I think have actually stayed inside. And this is a really great structure and a tool to bring it out and to do that. In terms of much of that work, I think is importantly done on a collaborative basis. I agree with some of what's been said, but I also think as consumers, we want our banks to be highly competitive. And there's a fine line there about programs on which it's helpful to collaborate, and banks have done a lot of collaboration around industry guidelines on hardship programs, debt waivers, all of those sorts of things. But when it comes to product design, I think it is a very healthy thing for one bank to say, oh, that bank's offering something at a lower interest rate. What are they doing? What's the business model? Can we do a better job of that? Can we offer something like that, but with a tweak here or there? And yes, it can lead to a proliferation of products that aren't always directly comparable, but I'd always want banks to be looking over each other's fence and trying to beat the other one.
Mm-hmm. Ross, how do programs like FIAP drive innovative solutions? Do you think it has a role there?
In a lot of ways, I think FIAP's in the same business as this place is, which is education. And I talked a minute ago about technology having upsides. Technology's also got downsides. For instance, in the US now, it's quite common for online retailers to engage in differential pricing by way of postcode. In other words, the poorer the postcode you live in, the higher the price you will pay. Because the algorithms have worked out if you live in a poorer postcode, socioeconomically, you have less access to physical ways to buy the goods, you have less access to information. So I think in part, society needs to push back against these things. As consumers and as human beings, we need to say no to these sorts of practices. And putting my hat on as a lawyer for a minute, we've sort of lost the capacity really at a fundamental level to discipline corporations. The law has come up short on how you actually control corporate behaviour. And that's just one example of sort of abhorrent corporate behaviour. And FIAP, I think, is a real force for good. It's out there teaching people through all of the organisations that you represent and teaching their consumers that they can expect to be treated properly. They can expect to be treated like human beings. They can expect not to be exploited. And that's a really powerful thing, I think.
Okay. I'd love to take some questions from the audience if anyone has a burning question for our panel. Yes?
Obviously, a well-paid and decent job is the best form of financial inclusion for everyone, but that's kind of outside the sphere of this conversation. I was wondering if the panel would comment on disruptors to the markets. And the best example, I come from South Australia, our power prices are sky high. So solar panels become the obvious opportunity, but the poor are locked out of achieving panels. But it would be a good long-term investment in terms of their future power prices. So a no-interest loan aimed at something like reducing future costs, such as energy costs, would be something that would make great sense, but perhaps would go against the interests of the power companies. I'm wondering if you could comment on that.
Well, I think I should start on that one. It's certainly the case that people have, from time to time, suggested access to low-interest loans for poorer people to take advantage of solar energy. One of the major constraints is that an awful lot of the people who find themselves in a financial hardship are actually renters rather than homeowners. If you look at the statistics for use of solar panels in the rental sector, it's only about, I think, 3 or 4% of rental accommodation actually has solar panels, and often that's for fortuitous reasons. So one of the things that we're certainly interested in exploring is the capacity to change the incentives for landlords, because we think that's something that has not been adequately addressed. In terms of providing direct access to solar power for the poorer parts of the community, there are certainly some useful developments going on right now in terms of some of the community grid-based initiatives. For example, there's one in the Northern Rivers region of New South Wales, which is looking specifically at trying to share power and in some cases provide it at low or no cost to some of the poorer members of those communities. There's also quite a bit of research going into what are called solar farms, which is essentially trying to set up either areas of land where you can have solar panels en masse, either on land or on buildings, which can then be deliberately diverted to the poorer parts of the community. While I've got the floor, one thing I should mention, which may not be well understood in this room, is that the poorer people in the community, the people on the lowest incomes, often have the highest levels of energy usage, as much as twice as much as a middle-class household. There's a whole range of reasons why that happens. Some of it is about the inefficiency of the housing stock, the inefficiency of the appliances, but some of it is just not, is about not really understanding how to reduce your consumption. So one of the elements embedded in FIAP is actually better education for consumers.
I was reading the other day about solar gardens where there's like community solar that people can invest in, renters can invest in, and then see a direct reduction on their bills. So those sort of initiatives could help as well, I expect. Is there any other questions from the floor, or does anyone here want to talk about that question on solar?
Well, just the question about the future and technology and financial inclusion. And so I'm an economist and I've worked in this stuff for a long time, and one of the reasons why why the financial inclusion agenda is so positive is that there are clear market failures in the financial sector because of information asymmetries, and Joseph Stiglitz won the Nobel Prize for this back sort of over 10 years ago, where he noticed that when people would walk into a bank, as soon as they said, "Look, I really think I can take this loan, and I'm a bit risky, and you can charge me a 30% interest rate." There aren't any 30% interest rates that banks provide to people, because as soon as you start asking for that, the bankers go, "Well, they're so risky. I'm going to use that since they want it. I'm not going to give it to them." These information asymmetries mean that there are parts of the market that if you had better information, then credit would be extended. And fundamentally, that's what new technology is able to do. So you are able to gather information about people's ability to pay it back. You are able to gather information and analyse it quickly and much more cheaply than in the past. And this is opening up it's relieving that market failure, that information asymmetry, and should improve the distribution of credit. And that's one of the reasons why in the GPFI, running towards digital technology is identified as a real breakthrough in improving financial inclusion.
I guess there's a fine line between when you've got enough information to offer a loan at, say, 30% versus when people are going to start to see that as predatory as well. So are there any other questions from the audience, please? Yes, there's one right here.
Oh, thank you. Thank you very much. Molly Harris-Olsen, I am on the FIAP, have the privilege of being on the FIAP Advisory Committee, but I run Fair Trade Australia New Zealand, and the focus of my financial inclusion brain is actually on the poorest in the least developed countries, primarily farmers who are trying to get access to global markets. Less than 1% of the world's global trade is conducted with poor countries. But my question really is for Jason and the rest of the panel is it's fantastic to see the way the FIAP in this discussion is and the way it is generally connected to the G20 and to the goals. And I just wanted to invite, and it may not be something you can sort of come up with very quickly, but I'm constantly trying to think about ways that we can connect what Australia is doing in financial inclusion domestically with what we have the potential to do in terms of enabling regional, particularly farmers and other poor communities, to have access to finances. And it's simple things like NAB happens to be one of the world's largest workplaces that's just by procuring fair trade tea and coffee, they're actually providing enormous benefits to farmers around the world. So I wanted to ask the question, particularly of Jason, do you have thoughts on how we can really connect what we're doing domestically to what our potential impacts could be internationally? And for the rest of you, in the banking and energy sectors and other things, are there ways that you can see that we could also be, at the same time that we're looking at our domestic impacts, making sure that we're connecting these to the other part of the world that has these realities that are so difficult?
Go ahead.
Yeah, so, it sounds like a bureaucratic answer, but the voluntary national review, which the government's going to produce on behalf of the community, will be displayed and shown at the UN in front of all of the UN countries. And that kind of observation and critical analysis, because we actually present it and say, here are our results, and get criticised for it, and we criticise others and learn from others. In that way, the Sustainable Development Goals, we're held accountable for how we're travelling against Sustainable Development Goals. Within them, financial inclusion is very strongly represented. And our VNR is about us, so we will have case studies, hopefully, around microfinance in there and other initiatives in financial inclusion that we can take to the world. And that is one way of connecting Sustainable Development Goals to initiatives and so other countries can see them. Unfortunately, I don't know much about domestic sort of policies that we could potentially run out, but at the macro level, that's kind of how we're thinking about it. But look, if you've got any ideas about how to do it, we would definitely like to hear it.
Yeah, I've got an idea. Australia has some of the most expensive remittance corridors in the world from us to the Pacific. If we really want to do something practical, we need to make it much cheaper for Pacific Island people who are working in our nation to send money home. At the moment, the remittance costs typically run between 10% and 20%. So if you're picking fruit in the Riverina and you're from a Pacific nation, you want to send money back to your family and you want to send $500, it's going to cost you somewhere between $50 and $100. Why? Because the banks are putting the cheap money transfer operators out of business. And there's a complicated story behind that, but the bottom line is, as a nation, we really need to address this. The answer ultimately will come in technology, but we're not there yet. And it's a horrible tax to impose, effectively a horrible tax to impose on people who are working here.
We're running low on time, but do you want to respond to that, Anna?
Okay. Well, no, I think it's important. I don't mean to be glib about it. I'll take it on board. Seriously, go and have a think about it, because I think he's right. The only other thing I'd add to Molly's question is, of course, most large Australian banks are global organisations, and a number of them are working in places like Laos and Cambodia, and as well as in the financial capitals of the Western world. So I think a lot of what they're learning internally now about hardship programs, about the products that work and don't work with people on low incomes, is learning that they can take, that's not necessarily happening in large scale now, but going back to what I said about FIAP, it starts to get people in a framework of thinking, not only across all parts of their business, and not only domestically. So I think there are real opportunities that FIAP could drive thinking about banking activities in other jurisdictions.
Well, the time has expired, but perhaps I could invite each of you to say in one sentence what is one change that you would like to see made in your sector to enable inclusive growth.
Well, I'm happy to start, but gee, it's going to be a long sentence, everyone. No, I think it would be around trust to reach out by people who feel stigma associated with being vulnerable. Our research is saying that 2/3 don't know what's available of our customers in terms of help, but 41% of people are ashamed to actually come forward associated with their financial vulnerability. So if we could rebuild, and someone talked about trust, in our institutions and remove stigma, the way we've been doing it with mental health, for instance, and domestic violence, if we could get that breakthrough in terms of financial vulnerability, that'd be great.
Okay, 30 words or less, everyone.
Okay, in the context of just this year alone, where we've got a Royal Commission and a lot of political heat around banking, mine would be that we come out with thoughtful solutions that don't put in place a regulatory environment that is so tight that it pushes more vulnerable people into the unregulated sector in order to access credit at all.
To paraphrase Fiona Guthrie, whom Delia Rickard talked about, FIAP is a program which is unusual insofar as at least part of its guiding principle appears to be kindness and empathy, particularly empathy. We think it needs to be sustained. We think it needs to be spread to the other energy retailers. We encourage government not to drop the ball, but to keep going.
Yeah, if there's anybody from the New South Wales Department of Education here, can we please have a look at our HSC curriculum or our high school education around financial literacy and financial education? It's lacking. It's just missing in action.
And just encourage any non-government people here today to look at the SDGs and see whether you think it's a framework that you'd find useful in sort of framing how you do your business.
Well, that's all we have time for. There's obviously a lot to unpick here, and I look forward to continuing discussions. Thank you, Anna, Pat, Keith, Ross and Jason. Thank you very much.